Good day and welcome to the D-Marq-AnalyticS channel. In today's video, we analyze 4 Vanguard ETFs that we are currently not invested in. Each of these 4 ETFs carries a gold rating from Morningstar. The only reason we are currently not invested in these is due to the fund overlap with our 5 core fund ETFs. Please check out that video published on the 16th of March. Exchange-traded funds, ETFs, are popular among a wide range of investors for building portfolios or gaining exposure to specific sectors. They can either be a part of your overall investment strategy or serve as the sole type of security in which you invest. ETFs trade similarly to stocks, but their price movements can also mirror broader investments or entire market indexes. They offer several advantages, especially when compared to actively managed funds, such as mutual funds. However, there are some drawbacks to consider. Some ETFs may have limitations regarding diversification and dividends. Additionally, investment vehicles like ETFs, which track an index, are vulnerable to its performance, as they lack the oversight of a nimble manager who can protect against downturns. The first ETF in our video today is the Vanguard Large Cap Index Fund ETF, ticker VV. This investment aims to reflect the performance of the CRSP US Large Cap Index, which represents large cap stocks and covers about 85% of US market capitalization. Its top 5 holdings include Apple at 7.24%, Microsoft at 5.84%, Nvidia at 5.75%, Amazon at 3.98%, and Meta at 2.88%. The fund matched the S&P total returns over the past decade. It currently yields 1.31% and has a dividend growth rate of 6.5%. It has an expense ratio of 0.04% and $59.21 billion in assets under management, with just 2% turnover. Onto our second ETF, which is the Vanguard Value Index Fund ETF, ticker VTV. This investment aims to reflect the performance of the CRSP US Large Cap Value Index, which captures the essence of large cap value stocks. Using an indexing approach, the fund focuses on a diverse range of value stocks from major US companies. Its top 5 holdings include Buffett's Berkshire Hathaway at 3.46%, JP Chase at 3.30%, ExxonMobil at 2.17%, Broadcom at 2.06%, and United Health Group at 1.94%. It currently yields 2.26%, with a 3-year compounded annual growth rate of 6.55%. It has a 0.04% expense ratio and $195.24 billion in assets under management, with a turnover of 9%. The third ETF in our video today is the Vanguard Total World Stock Index ETF, ticker VT. This investment seeks to track the FTSE Global All Cap Index, reflecting the growth of companies in developed and emerging markets worldwide through an indexing strategy. Its top 5 holdings include Apple at 3.86%, Microsoft at 3.29%, Nvidia at 3.26%, Amazon at 2.22%, and Meta at 1.63%. It currently yields 1.93% with a 3-year compounded annual growth rate of 4.85%. It has an expense ratio of 0.06% and $55.47 billion in assets under management, with a 3% turnover. The fourth and final ETF for today's analysis is the Vanguard High Dividend Yield Index ETF, ticker VOIM. This investment aims to track the FTSE High Dividend Yield Index, which highlights companies with high dividend returns. The manager uses an indexing strategy to follow this index's performance, focusing on stocks from companies that consistently offer above-average dividends. Its top 5 holdings include Broadcom at 4.94%, JP Chase at 4.05%, ExxonMobil at 2.72%, Walmart at 2.33%, and Procter & Gamble at 2.23%. It currently yields 2.85% with a 3-year compounded annual growth rate of 5.95%. It has an expense ratio of 0.06% and $75.97 billion in assets under management, with a 13% turnover. Today, we have looked at 4 gold-rated ETFs that we were interested in analyzing. I would like to thank you all for staying till the end, and I wish you all have a successful investment journey. For more content, kindly like and subscribe.